Hello everyone, hope you all are doing great and having a nice Thursday. And hope everyone is safe, all right, especially in Ukraine and Russia. But yeah, today we're going to be discussing about the Luna ecosystem, especially the stablecoin. And as you are aware, yesterday we discussed about the UXD stablecoin from the UXD protocol, right? So, and we discussed like how UXD actually solves the stablecoin trilemma, which is being decentralized, stable, and capital efficient at the same time. Okay, so Luna Foundation Guard, as you see, LFG. Okay, LFG is let's fucking go, but in this case, it is Luna Foundation Guard, but it's LFG. Okay, they raised 1 billion US dollars to form Bitcoin reserve for UST. Okay, and the capital, as I mentioned over here, the capital will be used to create a new reserve that can act as a release valve for UST redemptions during sell-offs in crypto markets. And of course, like there are different partners, Jump Crypto Trading, yeah, Jump Crypto, Three Arrows Capital, led the raise, Republic Capital, GSR, Tribe Capital, DeFi Capital, and so on and so forth. Okay, so all these people they helped the Luna Foundation God in order to raise 1 billion. And why? Because as you're aware, Luna and UST, the stablecoin, the USD stablecoin is actually backed by the native asset, which is Luna. Okay, both are native asset to the Terra ecosystem, but the thing is, they have this mint and burn relationship. Okay, so if you burn $1 worth of Luna, you can mint $1 worth of USD. Okay, and you can it's vice versa. Okay, if you burn $1 worth of USD, you can mint $1 worth of Luna. But what if the native asset, the volatile asset, which is Luna, the price is going in a different direction in the market? Okay, it's not trending up. Maybe it's going down. Okay, so in that case, what happens is people want to get rid of that asset as soon as possible. And doing that, what they do is people having USD, they redeem those USD for Luna, and what they do is they basically go and dump Luna into the market, and this causes a spiral effect into the market, causing the price to go even lower and lower and lower. Okay, this is a hypothetical scenario, but it is possible. Okay, we have seen it could be possible. And of course, like people like arbitragers can come and they can profit from this mint and burn relationship of Terra. Okay, so when the peg goes above like $1 of one USD, or when it goes below $1 of USD, arbitrage can make money out of that, and that's called arbitrage. So basically, they are taking a similar approach. Of course, as you know, like USD stablecoin right now, it's pretty established, I would say, because as we have seen in the growth of like algorithmic stablecoin, there is a product market fit for it. How do we know this? We have seen the numbers in quarter 4 last year. In quarter 4, the algorithmic stablecoin, especially UST, I would say it grew by 260% compared to any other type of stablecoin. And we have discussed this yesterday. Okay, we have seen the chart, we have seen the data, and also I would say it does actually make sense, because why? The crypto market needs a stable coin or a stable asset which is outside the fiat system. Okay, not like USDC or USD. That's great, but like we need a stable coin which is decentralized, capital efficient, and it is stable at the same time. But in USD's case, people always had this skepticism or like criticism, you could say, like one common criticism, and this is mentioned by Terra themselves, and people know this, but if you aren't aware, you should know this. One common criticism of algorithmic stablecoins, especially UST in this case, is their reflexive nature, in the sense like it goes up and down, like from that $1 peg that it needs to maintain. And this is the reflexive nature user and the hypothetical risk of a bank run scenario where demand to sell the stable outstrips supply in a way that causes compounding price decrease and decreases in both native assets. What are the both native assets? Terra and UST. Okay, so basically when the price is going down, people want to just get rid of it as soon as possible, and that causes that hypothetical risk of a bank run. But still, it's a risk, So that is why they're taking this approach in order to bring in, like as I mentioned over here, $1 billion in private token sale, to establish a decentralized UST forex reserve. Okay, so they are going to back the UST's peg by adding different types of assets. Probably right now they denominated the foreign exchange reserve of that UST in BTC. That means they basically, what basically they're doing? It's like the Fed. If there's a Fed, like I mean, in US, the central bank is the Fed. They have dollars, and dollar is backed by basically nothing. But back in the days, dollar was backed by gold. Okay, so right now they use Terra is using a similar concept to back their stablecoin, which is UST, by Bitcoin, okay, by $1 billion worth of Bitcoin. Okay, so they're adding that to their reserve, and they are going to use that in order to back that peg, so that UST is always $1. Okay, that's just they're creating security for that, like not the security as we know in the markets, but like they are making sure the whole Terra ecosystem is much more secure, and this UST has a much prominent role in the entire digital asset or crypto ecosystem and markets and so on and so forth. All right, so that is what they're doing. It's a very good indication why they just released this like a few days ago, like a couple of days ago, but if you remember, if you watched yesterday's episode, which I highly recommend you go and do that, I explain you all about stable coins and where we are right now, and how would it look like to go forward. But just to give you a TLDR of yesterday, was like we discussed about UXD protocol, and we have seen how UXD is the stablecoin which is solving the trilemma of a stablecoin itself. First of all, it's decentralized because it is because the collateral which you can add in order to mint UXD is decentralized, which is BTC, ETH. I'll just show you in a bit, and Sol, okay, as of right now. And it's also stable because they're using 100% delta neutral position. That means they're using the long spot market, they're using the spot market, and they're using the futures market in order to balance that. That means they're balancing that out. They're maintaining the peg using the price action of an asset. Okay, they're like price action of assets. Okay, they're not using like a circulating supply or like any other token. So they're diversifying their risk with different decentralized assets or crypto assets. And also what this does is this makes it much more capital efficient because as you can see over here, the UXD protocol is capital efficient. Users can issue one UXD with one USD worth of assets. That means without a requirement of over collateralization. As you know, like maker vaults, like in OSS vaults, if you need to mint DAI, you need to add in 170% at least worth of collateral in the form of ETH. Okay, so that means you need to put in $170 in the form of ETH in order to mint $100 worth of DAI. So that means you're over collateralizing. But in this case, UXD, it's always one to one. You put in $1 worth of BTC, you can mint $1 worth of UXD. And you put in $1 trillion worth of UXD, I mean BTC, you can mint $1 trillion worth of UXD, and so on and so forth. Endless. Okay, but anyways, I hope you get the logic. So the thing is, it's good to know that Luna is taking a similar approach as UXT is doing, and that is exactly why I'm pretty optimistic on these sort of stablecoins, especially to see like how Luna does in the next few years. I think they're going to do well because now they are, they're spreading the risk with other decentralized assets. It is a risk, but nevertheless, it's a good risk to have if we truly have the conviction that Bitcoin is the asset that we dream of and that we think of and that we bet on or whatever, Um, if we think like that, and probably in the future they're going to add other assets as well, and like Ethereum, Solana, and any other asset. I'm sure they're going to do that. But the thing is, right now, Luna is already like Terra, the UST stablecoin. It's already pretty mature. Okay, it's got like 12 billion worth of market cap already in it. But and if we control F and just try to find like UXD, we don't see UXD in listed even in CoinGecko as of right now. Okay, and CoinGecko is generally pretty late. But anyways, the thing is, UXD is still pretty young. It's very young because it just launched like a month ago. Okay, so yeah, or so they had their IDO just a month ago. Yeah, probably something now. Yeah, so they're pretty new, but anyways, I think this is the right approach, and they are doing it also on Solana, and Terra is also, Terra is always integrating with different chains like Ethereum, Solana, and everywhere. So I think this will also probably has the potential to grow a lot. But I think I'm pretty optimistic on the UXD side because on the UXD, they're just starting off with the idea that we are going to back our stablecoin with these decentralized assets, as you can see over here. And of course, they're going to keep adding as the liquidity of these of other tokens increases, or tokens or coins. They're going to probably keep adding that. But I think for now, it's like Sol BTC. That's pretty cool, you know. So yeah, I just wanted to share this with you, and yeah, I hope you explore the algorithmic stablecoin ecosystem a bit more, not just Terra, not just UXD, and I highly recommend go ahead and watch yesterday's video. You're gonna get a whole overview of like starting from the basics, what stablecoin is, and so on and so forth, where we are right now, where we were, with all examples. Okay, so go do that, and yeah, I hope you enjoyed, and I'll see you when I see you. All right, bye now.